Hello, my name is Bailey Prince, a double major in finance and accounting at Westminster College. In this short segment, I and four others will offer our analysis on the current question at hand. This question being if commercial real estate is in a bubble, coming into its own market, or experiencing inflation. Our current assessment of the commercial real estate market is likely a bubble. This is because simple inflation and other factors are just not representative of the current behavior we are seeing with commercial real estate. The price fluctuations in this case is just not justifiable, leading us to this conclusion. When looking at a market regarding its current and future market conditions, there are a variety of different markers to look at. One being current rates of inflation, 2 and 3 going hand in hand, which are supply and demand, and whether these are going up or down. 4 are interest rates, and there are a handful of others that also offer a conclusion to this as well. It is also good to look at the term market bubble in general if we are in fact deeming this asset of having bubble-like characteristics. In general, when a bubble happens, this is due to some speculation on the price being increased, as well as new programs that could also incentivize investors to buy. This could be like falling interest rates or programs that assist real estate purchase. As soon as these happen, there will be a boom of purchase of the asset, and eventually these assets will see a peak at which it will have a dive period or a pandemic period or a panic period. After the perceived value of a given asset is no longer there, this is deemed to be the panic period. There is no time frame for a bubble, and there is no way of really knowing that a market is in one till either it's close to already being done or it's already happened. As soon as this happens, we have seen in recent years that there has been a shift away in commercial real estate for businesses and multifamily living. As the pandemic is coming to an end, we are starting to see companies in large looking for less commercial real estate space. This could be due to their new perceived value of remote working and other factors, but only time could tell when looking at the market of just pure office space. As you continue to watch the video, keep in mind these basic fundamental ideas, and as we individually give you a rundown of commercial real estate and its market and what it's really up to.
Thanks, Bailey, for that wonderful introduction. Hi, I'm Isaac Landau. I'm also a finance major, and I'm here to help provide some more context as to why we believe that commercial real estate is in a bubble. So when the coronavirus hit, it dramatically changed how the market functions, how life functioned, and there are several things that specifically have impacted how commercial real estate functions. So first, let's start off with quantitative easing. So because the market slowed down significantly, the Fed decided to implement quantitative easing, which is essentially when the Fed decides to buy back long-term securities in order to stimulate growth and borrowing and investing. And what that also does is it significantly lowers the interest rate. As you know, interest rates are at an all-time low since they've been in forever, about 10 years or so. And what that does is it also encourages borrowing. So a lot of companies are now borrowing more money because interest rates are a lot lower. And they're extending leases they're extending the lease and borrowing loans to extend the lease on their commercial real estate. Another thing that happened was the fact that telecommunication jumped up significantly. Companies were not allowed to have employees in an office space, and so we started to see this movement from an office space to working at home. And it appears as though companies prefer to not have to pay for an office space because it's cheaper and there's more. It's easier for them to do their work remotely. And so this starts to lead to several problems, which enforces our reason as to why we think it's a bubble, in that we are starting to see that there is less and less demand for these offices. and these office spaces, these commercial real estate businesses. But at the same time, these same companies are borrowing more and more money, and extending those leases. So there's this increase in borrowing, a decrease in the demand that's happening, and it appears that the price of these commercial real estates are also increasing. And so that's just some context due to what COVID-19 has done, which influences our position that we believe that commercial real estate is in a bubble. Thank you.
Hi, my name's Isaac Hedrick. I am a rising senior at Westminster, and I am also pursuing a finance major. I will be following and touching more subjects on commercial real estate. I will talk more about the retail side of commercial real estate and how it's in trouble. Isaac Landau will touch more on the office and leasing side, or more the office side, but I will touch on retail instead. So, as we know, commercial real estate is in trouble, and turbulence in the $15 trillion market is threatening to bleed over into the broader financial system, just as the U.S. struggles to emerge from a recession of COVID-19. The longer the pandemic paralyzes hotels, retailers, and and office buildings, the more difficult it'll be for the property owners to meet their mortgage payments. This will eventually lead to defaults and eventual foreclosures. Companies like JCPenney, Neiman Marcus, and Pier 1 filed for bankruptcy. Retail properties are losing major tenants with no clear plan to replace them, because everyone has been struggling. But honestly, sometimes people just forget the depth of what commercial real estate is. That could be a big issue. A major problem is no one knows how long the drop in commercial real estate will last, and business travel has still been at a halt for many companies. So even the hotel and hospitality side are being still feeling the brunt and are getting hammered. And while office buildings have not yet felt the full effect, because most leases tend to be a multi-year lease, that may change as companies might rethink how they operate, because they can see that they can function at home and they don't need to spend these huge expenses. They can still work from home. So it has been more clear that the virus will continue to cut into our revenue, as I mentioned, especially for the office building leases. So even the property owners who have been able to patch together a few payments and find money to fill the payments, thanks to the relief that's been passed by the Congress, it may slip. So the loss of paying tenants could touch off a wave of property write-downs and eventual foreclosures. But it's not just a pocket of wealthy investors who will get hurt. I believe 87% of public pension funds and 73% of private funds hold real estate investments. So that is huge and very drastic. So borrowers seeking loan relief or considering refinancing are also running into trouble. And as the uncertainty rises and caused by the virus, has left them with no clear projection of future revenue streams for their buildings. So every lender is trying to help regardless of form of finance, but sooner or later the borrower needs customers.
This past year and a half has been a whirlwind of events from the impact of the coronavirus. We have seen the impact on our markets, on our everyday life, and on our health. So today I'm going to be sitting here and talking to you guys about what the future looks like for the commercial real estate market. The commercial real estate market, once the pandemic hit in 2020, early March, was swamped with not understanding what they could do to get out of this. I'm going to first of all split the commercial real estate market into sectors. And I want to touch on the sectors that I think have been hit the most by the impact of the virus. So we first have the office sector, which is what I'm going to be focusing most on today. So just office spaces. Then you have your retail sector, so your stores. And then you have your industrial sector. And then you have your multifamily sector, and etc. So what has mostly been impacted by COVID has been the office spaces with commercial real estate. That's no go. And the issue with the office spaces started when we weren't able to meet face-to-face in work and there was stay-at-home orders. This also affected many retail stores along with all of the other businesses. It didn't affect as much the multifamily apartment homes. That's everybody needs a home, you know? So going back to the office spaces. The office spaces have since from early March of 2020, many leases haven't been re-signed. Many leases, if re-signed, spaces have decreased, and the willingness of people actually wanting to get back to office life aren't as high as expected. This has kind of caused a damper, you could say, in the commercial real estate market in just this sector. Because I do believe, as I was explaining previously, I just believe what's struggling in that sector the most is the office space and the availability of getting tenants to want to move into those office spaces. I mean, right now we're looking at the housing market, for instance, like just with people wanting to move. And yes, multifamily homes aren't specifically in the residential real estate market, they're in the commercial real estate market, but you have a lot of people, I mean, just in Salt Lake alone, we see so many apartment buildings getting built very often, and it seems like there's many people who are willing to move in. So I really don't have worries for those in the future. And I was reading an article, and what the article was saying was how the difference in the office spaces versus all the other sectors of residential real estate and if or how it's going to boom. Again, bringing up this whole idea of people like working from home, people like maybe not even coming back into the office, maybe they like their at-home office. There's a lot of possibilities as to why, and many of the articles that I was researching had put a really big emphasis on data being a really big use in commercial real estate for like the big firms recently, just because they need to capture so much data as to what these trends are going to look like in the future. As it moves forward with 2021, my predictions are we're going to see, many storefronts maybe still struggling from the pandemic. We're going to see office spaces definitely struggling from the pandemic. I've had firsthand exposure with one of my neighbors who owns properties in downtown Salt Lake, and he's just saying so many people aren't re-signing their lease. If they're re-signing their lease, they don't want as big of a property amount. Or an office space length amount. It's going to become a very big problem, and we need to figure out if, as in the commercial real estate market, if this is a bubble, and if so, what are we going to do to ensure that everybody who is invested in the commercial real estate market isn't going to nothing's going to happen to them like what happened to them in 2008. So
great. Thanks, Tori. My name is Zach Douglas, and I am a finance major here at Westminster College as well. In conclusion, we've determined that commercial real estate is experiencing the effects of a bubble. As we look into 2021 and beyond the pandemic, it is important to recognize where the future of the office, hotel, and apartment markets are headed. We've chosen these three markets to conduct intensive research on because we believe they are the most influential in the commercial real estate market as a whole. Since millions of Americans were expected to and able to work from home during the pandemic, the demand for office spaces steadily decreased over the course of the year. Ultimately, these office vacancies hurt landlords' ability to negotiate, which drives down rent prices and creates opportunity for competition. After the pandemic subsides, it is reasonable to expect that the office market will stabilize. As stated by Ariel Bantata, founding and managing partner of the Florida-based investment firm Accesso Partners LLC, most firms recognize there will always be a need for office space. Maybe it will be less dense, maybe it will be more flexible to work a couple of days a week from home. There may be a hybrid situation where firms will continue to use office space with more flexibility. This statement shows that investors are optimistic about the future of the office market. Obviously, due to the quarantine that occurred in 2020, people became extremely hesitant to travel. This being said, the hotel market has been suffering from lack of demand. While hotels are anticipated to recover 50% of revenue in 2021, the industry isn't expected to fully recover until 2023. Unfortunately for hotel owners, $30.9 billion in outstanding hospitality loans are owed later in 2021. This could potentially cause a record number of hotels to declare bankruptcy later this year. This would be alarming for us, the consumer, to see, but it is quite possible. Although it was rumored that landlords and apartment owners would struggle to collect rent from their tenants amid the pandemic, 2020 and 2021, multifamily properties like apartment buildings actually held up quite well. We look forward to maintaining the steady demand for housing into 2021. This point is proven by John Morgan, the co-founder and managing principal of Antera, when he stated, "Housing is a fundamental need, so there is always a need, especially at an attainable price point. Rent prices are expected to increase at a dependable rate due to the stable demand that is currently being exhibited in the multifamily property market." Additionally, it is interesting to note that warehouses were deemed the commercial real estate champions for the year. This is due to the heavy demand for e-commerce orders and the need for shipping/distribution and the product production and development. Due to the increase in demand for warehouse space, the rent prices are high, vacancy rates are low. This creates a lucrative opportunity for investors who are interested in getting into the space. The warehouse industry should continue to be active as long as consumers are ordering products and demanding rapid delivery and manufacturing. It is reasonable to assume that this industry will be in demand for years to come. That's all we have today. Thanks a lot for taking the time to listen to our report on commercial real estate. We wish you the best of luck in any future endeavors that you might have within the commercial real estate market.